you are still struggling to make profits in the Forex market, or if you've been looking for a profitable strategy that you can use on your funded account to pass any funded account, or even use in your private account, then I got you covered. On this video today, I'm going to be taking you guys step by step on a strategy which in 2023 alone, I used to compound up to about $2 million in funding using all of that strategy. All right, because in 2023, I had almost about $5 million in funding. Just go on the playlist, the Pro Firm playlist on my channel. You're going to see all the videos. And one strategy that was consistent that I don't think I brought it to this channel is a strategy I'm going to be showing you guys on this particular video. This is a strategy any beginner, any dummy, any idiot in Forex trading can be able to use this strategy. And I'm going to teach you guys with the idea in mind that I want you to start using that strategy immediately after this video. Meaning I'm going to show you guys all the parameters. I'm going to show you guys the target, the entries, the risk management, money management, everything, the ins and out of this strategy so that you can be able to get the most out of this strategy. And like I said, this strategy is super simple. And this is the only time I'm telling you a strategy is guaranteed to make you profitable in the Forex market coming up right now. And welcome back to the channel. If you've been watching my content and you haven't subscribed, make sure you smash that subscribe button below to subscribe to the channel so that you never get left out anytime I post content like this. And if you are my returning viewer, welcome back. So this strategy is simple. This strategy we're going to be taking into advantage. That's why I'm just going to give you guys the theory. Then we're going to dash into my computer where I'm going to be showing you guys step by step. And we're going to be giving credit, all right? Before we even begin, we're going to be giving credit to Godlove University because this is actually a borrowed strategy which is already in Godlove University and I'm bringing it to YouTube. So this strategy is going to be both in Godlove University and also in YouTube. The other thing is in Godlove University, we're going to be doing more live sessions where we're going to be trading the strategy over and over and over. But yes, this is a strategy which you find in Godlove University and also find on YouTube. So let's talk about the methodology of the strategy. Then we're going to go on my computer where I'm going to show you guys step by step. Then we'll do backtesting, live trading with the strategy so that at the end of this video, you can already start practicing with that strategy. So what's this strategy based on? The strategy is based on market sessions. What are market sessions? You need to be able to remember, anytime we have the Forex market open, the Forex market is operating according to a particular market session. And market sessions are just as a result of the opening and closing of banks in different parts of the world. As easy as that. Remember, I want to keep it simple, right? Market sessions are just as a result of the opening and closing of banks all over the world. For example, here, as I'm recording this video, this is actually 10:24 a.m. in South Africa, and the market session that is actively open now is the London session, meaning banks are open in London and they are conducting business. So that's the London market session. We also have the New York session at 2:30 or 2 p.m. my time in South Africa. The London market is going to open. The London people are going to get up. Banks are going to open. So the London session is going to open. In the night, you have the Asian session is going to be open. The Tokyo session will be open. The Australian session will also be open. So those are just market sessions, just as a result of where there's activity, where banks are open, where banks are banned, or where there's activity, there's more activity in the Forex market in that part of the world. The keyword is in that part of the world. So now, since you already know what are market sessions, we're going to be taking advantage of the opening and closing of major market sessions, all right? We're going to be taking advantage of what? The opening and closing of different market sessions. Why are we taking advantage of the opening and closing of different market sessions? You need to be able to understand at the start of every market session, there are new participants that are coming into the market, all right? So because new participants are coming into the market, you expect us to be able to have a lot of volatility and a lot of liquidity at the open of major market sessions. Another reason that will also create a lot of liquidity at the start or the close of major market sessions New participants are going to be coming into the game. Some people that are moving from previous market sessions to that current market sessions might be taking profit, might be closing their positions. Even still, just psychologically, people will be able to know that, okay, since the new market session is opening, many banks, hedge funds, big players are going to be coming into the game. And that psychological effect tends to create a lot of liquidity at the start and at the end of major market sessions. So you see, so all these factors will always add to the Forex market ever finish. All these factors will guarantee us that we'll always have major liquidity at the start of a market session and a lot of liquidity at the close of major market sessions. So that's what we're going to be capitalizing on. So how are we going to capitalize on? I'm going to be showing you guys the time frame we'll use, and then how we're going to set our buy and sell stop. So at the start of the market session or at the close of the market session, we don't know where the market is going to go. We don't know if demand or supply is going to be winning. We don't know if the sellers or the buyers are going to be winning. So that's why we are coming in with the buy and the sell stop to tell the market that, okay, we're not going to be trying to gamble where the market is going to go. Anywhere you want to go, I want to go with you. As easy as that. I hope you guys are taking note, because like I said, this is a strategy you start using after this video. People are going to post screenshots. Trust me, you go on my Instagram tomorrow, you will see people already be posting videos and tagging me with this strategy of them passing their profit accounts and passing and making profit in their private account. So yes, now we're going to be going into my computer where I'm going to show you guys step by step how to do this, how you can set your stop loss, your take profit, risk management, money management, and everything you need to be able to win with this particular strategy. So let me just put my recording on. Voila. So if you can see here, we have our MetaTrader, no, not MetaTrader, we have TradingView open. The platform you're going to be using to do the analysis is TradingView, and then you can just go on MetaTrader 5 if you are using MetaTrader 5 to place your trade. The reason why I want us to use TradingView is because TradingView is having some indicators, or one indicator that we need, all right? TradingView is having one indicator that we need to be able to do what? To be able to easily know the market sessions, when the market session is going to be closing, when is it going to be opening. You can just go on the internet and type again, Lionheart funding program sessions or something. I think it's sessions time. Yes, sessions time. So if you go on Lionheart funding program, you can see market sessions time zone. If you go on Lionheart funding program, you're still going to be able to see those time zones. You can still see when a major market session is going to be closing, when is it going to be opening. But we've even made it very, very easy. For example, this will show you in real time. You can see this will show you in real time. You can see this is on Lionheart funding program. And here, as we are speaking, you can see what is blinking is this yellow and this green, all right? Meaning if we come here, the yellow one is what? The London session. So you can see the London session is open while the Tokyo session was closed just a few minutes ago. And at the same time, the London session is open. So the active one we have now is the London session. And if you can check up there, that is the time, which is 10:30 a.m. The time is even ticking as we speak. As the time is going to be going, you will see this will keep going up. And where you have the red is where you have the highest volume in the market, or the highest volatility in the market, which is normally during the overlap between the London and the New York. All right. Now, I don't want you guys to go through the method that can be complicated for you guys. So that's why on TradingView, I want you to search for this indicator. The indicator is known as Market Sessions by Leviathan. All right. Market Sessions by Leviathan. Market Sessions by Leviathan. Then you just put it on your chart, and voila, your chart is going to look exactly like this. You can see just by looking, you can see I have the Tokyo. 3 major sessions we're going to be trading. You trade the Tokyo, the London, and the New York. That's it. Tokyo, London, and New York. Those are the 3 major sessions we're going to be trading. Tokyo, London, and New York. So once you put it on your computer, you can just go on setting. You can turn off the other market sessions. You leave just the Tokyo, the London, and the New York session, all right? So we can let's just remove it on our chart and put it again so that you guys can see. So let's just go here and then we remove. You can see. You go again on indicators. Just search on what? Just search on market sessions. Market sessions by Leviathan. You click on that one. Maybe it's going to be on the premium version of TradingView. I don't know. But guys, just take your trading serious. Even if it's on the premium version of TradingView, it's like $10 a month. Just subscribe and pay for the premium version so that you can be able to use this tool. So on my computer, this is a trade I took. If I can show you on my phone or on my screen, you're going to see this particular trade on USD CAD. I took it in the morning. And how did I take that trade? I'm already up by almost 1 arrow. I'm going to 2. I entered here, my stop loss here, and my take profit was here. And you can see the market is almost about one arrow. Very soon, my take profit will be hit. It's good. So the first thing is for you to be able to put that indicator on your computer. All right, are you with me? First thing, put this indicator, market sessions by Leviathan, on your computer so that we can be able to know the opening and the closing of all the major market sessions we're going to be trading. And those major market sessions, Tokyo, London, and New York. Now, let's just take, for example, let's just take for yesterday, right? The market normally starts at the Tokyo sessions right up to the New York session. So for yesterday, you can see this was it right here. The Tokyo session opened right here, and it closes right here. The London session, you can see London opened yesterday right here, and it closes right here. The New York session yesterday opened right here, and it closes right here. And then the new day again started. The Tokyo again started. So I started again trading in the morning right here. You can see I already made 2% in the morning. This was a position I took in the morning. And don't worry, I'm going to be showing you guys exactly step by step how you can do the same thing. So I entered this one here in the morning. My stop loss was just here. All right. My stop loss was here, and my take profit, I just go for a risk to reward of 1:2. My take profit was here, voila. So that was a trade I took in the morning, which was a winner. And this one again, I'm also in this one, 2% already in the morning in less than an hour, 2% here, and very soon we're going to be hitting 4% for the day. Good. Now you already know the methodology, right? I just need an empty space just so I can explain the methodology again for you guys to understand very well. So you need to, the time frame we're going to be using is the 15-minute time frame. Pay attention, the time frame we're going to be using is the 15-minute time frame. So you put on the 15-minute time frame, and at the close of the market session, let's just take, for example, if we can take something like the London session, you can see the London session opens at 9 a.m. my time. So at 9 a.m., what do? You'll be able to see it on that indicator when it's going to open and when it's going to close. You can see separated by different colors. Now let's go here, right? Let's just say we have the market. I'm just going to use my pen. Let's just say we have something like this. We have the chart like this. And at this point, this is actually 9 a.m. This is 9 a.m., which is also the time the London session is opening. Good. And we're on the 15-minute time frame. So obviously, we're going to have something like this. We're going to have a candle like this. All right. If I can draw it very well, we're going to have a candle like this with the open, the close, the low, and the high. So at that 9 a.m., immediately the 9 o'clock candle closes completely. What do? You come here and you put your buy stop. All right. You put your buy stop, and here you put your sell. Oh, you put your sell stop here. Sorry, you put your sell stop here, and here you put your buy stop. Can you see that? So you use the high and the low of the candle, not the open and the close. You come here, you put your sell stop, and you come here, you put your buy stop. You use the high and the low, not the open and the close of the candle. What will happen? The market, remember, this is the 9 o'clock candle. The market is going to start trading down from 9 o'clock upward, or in the market session you're trading. Now, we don't know where the market is going to go. We don't know who is going to be winning the volatility at that particular point in time. If it's going to be the buyers or the seller, if it's going to be demand or supply. We don't know. But in the direction it goes, let's just say, okay, in our case, like the trade we just took in the morning, what happened? The market went in the opposite direction, which was this direction right here. Okay, which was this direction right here. So you can see the market went in that direction, and what happened? Our buy stop was triggered. So immediately you put your buy stop and your sell stop. Where do you put your stop loss and your take profit? Your stop loss of your buy stop becomes the sell stop. And the stop loss of the sell stop becomes the buy stop. Meaning the whole of this distance is going to act as what? It's going to act as your stop loss distance. And take profit is just 2 times. It's just 2 times your stop loss. That's it. Take profit up here is we're just going for a risk to reward of 1:2. Take profit down here is 2 times your stop loss. Take profit up here is 2 times your stop loss. Can you see that? So once you've already placed your stop loss, so immediately at 9 o'clock, the only thing you're just calculating is the distance, is this distance right here. All right, I call this distance the stop loss distance. The stop loss distance, your take profit is just going to be 2 times your stop loss distance. So the only thing you are calculating is just this distance between this low and this high, because you need that to be able to calculate the lot size you're going to be using. So let's just take, for example, let's just go on measure, and we measure this from here to here. You're going to be able to see this was almost about, let's go on measure again and just measure from here to here. So this was almost about 21 pips, right? 21 pips, and remember, our take profit is going to be 2 times that. But we need the lot size. We need to immediately know the lot size we're going to be using so that we don't risk more than 1% of our account. So we immediately go again to Lionheart Funding Program, position size calculator. We need the position size calculator. So you go to Lionheart Funding Program. You just search on Google Lionheart Funding Program trading calculator, or just go on LFP, click on trading calculators. This is where you're going to calculate the lot size. Remember, you're doing this quick. So long as you've already done this a couple of times, it's just going to become like a norm. So you're doing it quick. So you just come here. What's the currency pair we're going to be trading? Remember, we're taking an example on USD CAD. USD CAD should be here. This is USD CAD. And our account balance, let's just say we are trading with a $100,000 pro forma account, or even with a $25,000 pro forma account, right? And the risk per trade, make sure you come here and click on what? You click on size pip. You click on position size in pips. You click on position size in pips. And then you come down here and let's just say, you come down here and our stop loss here, remember it was 21 pips, and you click on calculate. Good. So the lot size we're going to be using here is 1.7. The lot size we're going to be using here so that we can only risk this amount is what? Is 1.7. So immediately just go back to MetaTrader 5. If you are placing in MetaTrader 5, immediately just go to MetaTrader 5. You put your lot size 1.7. So let's just go here. I'm going to close this. I've been doing a lot of back testing. That's why you see all these green screens. So we do our analysis on TradingView, and then we quickly just go to MetaTrader 5 to place our trade. MetaTrader 5 USD card should be somewhere here. USD card is there. Once USD card is open, we go here and we put, what do we put again? 1.7. And then since we have our 1.7, you just go here and you just right click anywhere on the screen. Let's just say this is the 9 o'clock candle, right? You just right click anywhere on the screen and you go on trading. You can see buy stop 1.7. Can you see? That's our buy stop right there. And let's see the line. The line is not showing. But anyway, we're going to adjust again. We're going to adjust. And then we click again right here. Just click at the bottom of the candle. Just at the bottom of that candle. Let's just say this was the 9 o'clock candle. You just click. You just put your mouse right below the bottom of the candle. You right click again. You go on trading. You can see sell stop. Boom. So this is our sell stop and this is our buy. We're going to delete this other one since it's not. We're going to delete our buy stop and put again. So just come here, delete your buy stop, and let's just wait for it to close. Good. So we're going to put our sell stop is already there, which is this one. And our buy stop, we just put our mouse just above that candle. On the high of that candle, go on trading and we put buy stop. Now we have our buy stop and we have our sell stop. We need to modify these positions, remember. And what was our distance again? Just go on modify. Our stop loss was what again? Take profit. Stop loss here in pips. Since we still have to enter the trade, you actually have to check the price and then you just come here and write the price. All right. For example, this one is just going to be 2 times. Since it was 21, I just know our buy stop. We can just come here. From here, it's going to be 21 times 2 is going to be 42. So 42 is going to be somewhere here. So that's 42, which is 1.4404. 1.4404. So let's just come here, which is take profit is, we can start 1.44 for 1.44047. Good. 1.44047. And we just do the same thing. You do the same thing for your stop loss. You come here again. Remember, what's our stop loss? Our stop loss is going to be here. A buy stop is here. Take profit is 2 times our stop loss. And our stop loss is just here. The stop loss of our buy stop is just here. While the stop loss of our sell stop is just here. So you just come here, make sure. So if you come here and you just measure 42 pips, you'll be able to see where 42 pips is. And you just go there and you put as the take profit for your what? For your sell stop. So you just do all of that and you click on OK. Now you already have your buy stop and your sell stop in place. As easy as that. You just sit down and you wait for the market to trigger. Meaning at that point in time, we have already calculated and we are only using a lot size in the sense that if that trade doesn't go our way, we're only going to be risking a particular percentage, all right? So our sell stop is going to be there with 1.7. Our stop loss is going to be there. Our buy stop is going to be there, lot size 1.7, and our stop loss is going to be there. Take profit is going to be 2 times our stop loss. Take profit is going to be 2 times our stop loss. That's it. As easy as that. That's it. Now, since we already know that, let's go now. Let's go here, and then we'll do some back testing from yesterday to see what would have actually happened. Let's do some back testing, right? Let's just do some back testing on USD CAD. Then we're going to go to Euro USD. We're going to go to Euro USD or any currency pair of your choice. So let's go to USD CAD. USD CAD started yesterday. Let's go to replay. And I want us to be able to do replay so that we can actually see what happened yesterday. Launch, replay bar. I want us to cut from here. Let's just cut from here. Good. So we are assuming. We are assuming I can then close this. Do you want to exit? I just need to minimize this. How do I minimize this? I just need to minimize this. Good. Perfect. So this is, we are trading now as if we were actually trading it, because this time this is actually 22:15 p.m. That's 22:15 p.m. yesterday. So we're going to just replay, and we do it as if we were trading live yesterday. So let's just go to next. You can see. Let's just go to play. Right, I think play, yeah. Let's just go to play. Okay. So we stop. We're just going to go back again. Let's go back again. Bar selector. We're going to go back again until a new session is open. We're going to go back until a new session is open. So shift. Okay. So let's just keep going until a new session is open. You can see we are still in the New York session. Very soon the Tokyo session is going to be open. So let's make this very big so that you guys can see. Let's make this very, very big so that you guys can see. Let's continue playing again. Voila, that's the Tokyo session. The Tokyo session is actually this candle right here. That's it. So we'll just go one candle again. Good. This is the Tokyo session right here. So we're going to have our buy stop. We're going to have our buy stop right here. This is going to be our buy. We're going to have our sell stop here and our buy stop just above the candle right there. So that's going to be our buy stop, and this is going to be our sell stop, right? Buy stop, sell stop. So the stop loss of our buy stop is going to be here. The stop loss of our sell stop is going to be here. Take profit is going to be 2 times that. So let's go back here. We bring the long position. So our buy stop is going to be here. So our take profit, where is it going to be? It's going to be just below. It's going to be here. So we can do this. Good. And take profit is 2 times that, meaning that's our take profit. Voila. Good. So that's a risk to reward of 1:2. Good. And then where's our sell stop again? After this, we're going to see where the market was going to be triggered, right? Our sell stop is going to be here. That's our sell stop. The stop loss of our sell stop is going to be right where the buy stop is. And our take profit is going to be 2 times that, risk to reward of 1:2. Oh, sorry. So risk to reward of 1:2. So let's just keep pulling until we see 1:2. Voila. That's it. So buy stop, sell stop, that's the stop loss. That area I call the stop loss distance. So are you guys ready for us to play and actually see what happened? Now remember, you need to calculate the lot size to know what lot size you are using so that you can only risk 1%. For example, let's just say if this was a $50,000 profit account and we are doing this, you can see our stop loss here is what? Our stop loss here is 11 pips and we are going for 22 pips. All right, so 11 pips, you can easily just go to that calculator to calculate to see what lot size you would have used. So let's just say we're having a $50,000 profit account and our stop loss is what? 11 pips. We want to risk what percent? We want to risk 1% of our account. Click on calculate. You can see the lot size we're going to be using is 6.5 lot size. So immediately just go to you can see, as I'm showing you guys the example, this trade already triggered and we are already making money. But anyway, you just quickly come here, you put that lot size of 6.6 on our method. Remember, we're analyzing on TradingView and we're placing the trade on MetaTrader 5. You put the lot size of 6.6 and then you just go on that candle just at the tip of that particular candle. So assuming, let's just assume if this was a candle, you just put your mouse here, you click, you go on trading, you choose buy stop. Okay, you choose buy stop, you come at the bottom of that candle again, you just place a mouse, right click, go on trading, you choose sell stop, and then you just go on modify, put your sell stop, put your stop loss, your take profit on both buy stop and sell stop. You see, so we've already placed, you can see we already have our traps in place. We are risking 1% and we are going for 2%. All right, the market is going to trade either way. It's going to trigger either way. So are you guys ready? Let's go. Let's continue playing. Good. So you can see the next candle, what was triggered? Our sell stop was triggered. So let's see what happened. Let's see what happened. Let's see what happened. Can you see we came back to break even? We came back to break even, but fortunately, our buy stop wasn't triggered. We are still in a trade. Let's continue going. Let's continue going. Let's continue going. Okay, I can see here, it looks as if our buy stop was triggered, meaning we're already down with 1%, but our buy stop is now triggered. So let's see. Good, 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 good. Voila. So if this target here wasn't so tight, but it looks as if what happened here, our buy stop was triggered somewhere here. So we triggered both buy and sell stop on this one, and we lost 2% of our account. Stay with me on this. Stay with me on this. We're doing it as if we're doing it on remarket yesterday. So let's continue. We are already down with 2% of our account. Let's continue from here to go to the next market session, right? Let's continue until we see now the London session. Remember, we were waiting for the London session. That's the London session candle. This is the London session candle, meaning our buy stop is going to be here, our sell stop is going to be here, and our buy stop is going to be here. You can see the next candle, our sell stop was already triggered, meaning the sell position, we're already in the sell right there. Our stop loss was just above this candle, and our take profit was a risk to reward of 1:2, right here. Boom. So let's see if we would have triggered take profit on this one. Let's go. Perfect. In less than an hour, we already triggered a take profit. So that's what, again, that with that one, we are already, remember, we already lost 2% here. We made 2%. It's still in less than 2 hours of the day. So now we are neutral. Let's continue going. Let's continue going. Now we are waiting for the end of what? We are waiting for the end of the Tokyo session. So the end of the Tokyo session, you can see, was this line right here. So our buy stop, our sell stop would have been here, and our buy stop here. So let's see what happened. Let's go, let's go. Okay, let's see what happened. Let's see what happened. Let's continue playing. Okay, let's continue our replay. Okay, let's continue. Okay, our sell stop was triggered, our buy stop was, so immediately the sell stop was triggered and it went back up. We lost 1%, meaning we are back down by -1%. So let's continue to see, and our buy stop is also triggered. So this one, let's see. Let's continue. So it would have been down by -1% here, then this one here would have neutralized it. So it's still neutral for the day. So let's continue. Open of the New York would have been here. Our sell stop would have, buy stop would have been here, sell stop here. So you can see the buy stop would have been triggered. So let's see, buy stop would have been triggered, buy stop would have been triggered, boom. Because the medial buy stop would have been triggered, we would have been having our, this is New York right here, would have been having our long position right there, stop loss there, and we're going for a risk to reward of 1:2. So there you go, you can see we entered there, risk to reward of 1:2, we already hit take profit on that. That's -1 + 2, we are up again by 1% for that day. So you just continue, very soon the London session is going to finish. You just continue. Okay, the London session actually finished here. So you can see just for yesterday alone, we are already up by 2%. Let's pick now another one that doesn't have to do with the Canadian dollar or doesn't have to do with USD. Or let's just pick the most popular, all right? Let's just pick the most popular in the market, which is Euro USD. Let's pick Euro USD and we can just go back as far as we can. Let's just go back as far as we can, and then we do back testing again so that you guys can see. So stay with me on this, guys. Let's go back as far as we can. Let's just go back as far as we can. Let's go back as far as we can. So this is actually 25th of January. Let's go back as far as we can so that we can do as much back testing as possible. All right. Now you guys already know the methodology, so we're going to be very, very fast this time around. We're going to be very, very fast this time around. Okay, so we can even start, here. I always like to start in the Tokyo because Tokyo is in the night. So we can even start here. We go on select bar and voila, this is the London session. So we can now begin our play, and now we are waiting for the Tokyo market to open so that we can take our trade. So let's go. Okay, let's go. Very soon the Tokyo market is going to be opening. That's the Tokyo market. Good, so that's the Tokyo candle. Our buy stop would have been here. That's our buy stop. That's our sell stop. Our take profit will be down here. Our take profit for the sell stop will be here, which is two times our stop loss. And the take profit for our buy stop will be up here, which is 2 times our stop loss. Remember, I'm fast now because I've already showed you guys the methodology. So let's play to see which one would have been triggered. Let's go. Okay, let's go back here. Click on the screen. Okay, let's continue the play to see which one would have triggered. Okay, our sell stop was I can't even finish explaining, and take profit was already hit. So you can see our sell stop was triggered there, and a risk to reward of 1:2. Boom, hit already. So let's just go on text. It means we are already up with what? We are already up with plus 2%. That's plus 2%. We are up with plus 2% already. Just by the start of the day, we are already up by plus 2%. So let's continue. Let's continue to the London session. Let's continue to the London session. Let's go. Let's continue to the London session. Stay with me, guys. I want us to backtest step by step. Let's continue. Good. That's the London session. So this was the London session right here. I can already see this one. I just need one step behind. All right. So let's put it here so that we can see clearly. Okay, let's go. Let's go. I want just the exact London candle. Good. That's the London candle right there. All right. That's the London candle right there. So we're supposed to have our buy stop right here, which is already getting triggered. Our sell stop here. Take profit of our buy stop here, or somewhere here. Two times our stop loss, and take profit of our sell stop right there. So let's play and see what actually happened. Good. Buy stop was triggered. That's our buy stop was triggered. Let's see. Sell stop was also triggered. So we already lost 1%, and now we are in our sell stop. So let's play and see. Sell stop was triggered. We are still in a trade. We are still in a trade. We are still in a trade. Remember here, we are down with plus 1% because we made 2%, and this one that was triggered, we lost 1%. So we are with plus 1% here. So let's play and see what actually happened after that. Let's see what actually happened. Okay, so this one didn't get to our take profit right here. If we're using a trailing stop of 1 arrow, it would have been a break-even trade. So if it was a break-even trade, it would have still been up with plus 1%. But if you were not using a trailing stop, then it would have been up by neutral again. And at the same time, the London opened right here. So this is the London market right there. And then our buy stop would have been here, our take profit, our stop loss, our sell stop right there. Take profit of our buy stop would have been here. So 2 times X, you can already see we are up again. We are already up now with plus 3% because this will be this plus this. So plus 3%. All right, plus 3%. And take profit already hit. What we are looking for now, we are just looking for now the end of the London session. So let's continue and look for the end of the London session. All right. Good, let's go. We're just looking for the end of the London session so that we can take the last trade. Good. So the end of the London session was right here, this candle right here, meaning our buy stop would have been here and our sell stop would have been here. You can see our buy stop was already triggered. Our take profit would have been 2 times this, which would have been around here. So let's see how far it would have gone. Let's see how far it would have gone. Good. Let's go. Boom. Take profit hit. That's plus 5% of our account. All right. And we are done for the day. We're not going to be trading at the end of the New York. We're just waiting now for the open of the Tokyo. So we just continue and look for now the open of the Tokyo. You can see, because that, you see why I said we're not going to trade at the end of the New York, because the market is dead at that point. See, we would have lost this trade, would have triggered on both sides, and would have lost. So now that's Tokyo. This is the Tokyo candle right here. So our buy stop would have been here, and our sell stop here. You can see we're already triggered on our buy stop. Take profit would have been up here. Take profit for this one would have been here. So let's play and see what would have happened. Remember, this one we're already in what again? 5%. If you can remember, we're already in 5%. Oh, sorry, we're already up by 5% just for that previous day. So let's play and see. You can see this one almost hit our stop loss, but it didn't hit. So let's see. Let's continue and see. Let's continue. We're lucky. Okay. Now it hit our stop loss right here. So we lost 1% of our account, meaning we are down with 4%. At the same time, the London opened right here. So by the time the London opened, our buy stop would have been, not that one, but our buy stop would have been here, and our sell stop would have been here. So our buy stop was triggered. Take profit for that would have been up here somewhere. Take profit for this would have been here. So let's play and see what happened. Remember, we are still up by plus 4%. So let's see, let's go. Boom, take profit hit on what? Take profit hit on the London Open. That's plus 6% of our account. By the same time that trade was still on, you can see we had the close of the Tokyo. You need to follow your strategy. We had the close of the Tokyo right here, meaning we would have also gotten a sell stop. We would have also gotten a sell stop right here. This is close of Tokyo, sell stop there. Remember, we're trading the open and the close of every major of the 3 major sessions I've already explained, right? At this point, you can see while we were still on this trade, we risk gain another percent here on the open and the close. We're just executing, analyze like a pro and execute like a robot. Don't fight your intuition, right? So at that same time again, we would have gotten our sell stop, buy stop here. Buy stop would have been triggered. Take profit would have been here, and boom. So it's plus 6%, plus 2%. We are up with 8% of our account. Let's continue to the New York. Can you see plus 8% of our account in less than 2 days? Let's continue to the New York. It's not magic when you guys see me. I buy an account and within the day I've already passed. I'm already funded. I'm getting payouts. I'm doing this. It's not magic. I'm showing you guys the same thing. There's enough money in the Forex market, bro. The fight is with poverty, not with one another. So take this and better yourself. Take this and create wealth through Forex trading. Remember, this is the modification that I've done that is working for me. If you just check randomly on the internet, even the ORB strategy, you're not going to see it explained like this. You're not going to see it being traded like this. So let's continue to the New York. Let's continue. Very soon the New York is going to be open. Okay, this was the New York candle. So I'm already seeing. So New York would have gotten our sell stop here and our buy stop there. Take profit for sell stop here. Take profit for buy stop here. So let's see what would have happened for the New York. Remember, we are up with plus 8%. We are up with plus 8%. So let's see what would have happened. Good. Sell stop was triggered in grand style. Let's see if take profit would have been hit on our sell stop. Good. Take profit hit on our sell stop plus 10%. Let's continue to the end, to the close of the London session. And to the close of the London session. Let's continue. Close of the London session. Good. So close of the London session, you can see that is it right there. Meaning we would have gotten our buy stop there, sell stop there. Take profit of sell stop, take profit of buy stop. Our sell stop was already triggered. So let's continue to see what would have happened. That's it. That's it. I'm seeing it. The market going to trigger our buy stop. Let's see. Okay. We were lucky. Our stop loss wasn't hit and our buy stop wasn't triggered. So let's continue. Not yet hit. Let's continue. We're lucky. Let's continue to see. You remember, our take profit is right down here. So let's continue to see. Did we hit our take profit? Let's see. If we draw this line right here, no, we didn't hit our take profit. And at the same time, you can see the Tokyo was open. So I'm just looking at this one. At the same time, while the Tokyo, this trade was still open, you would have already taken this one. But let's just continue to see how that one would have ended. Let's just continue. Boom! Take profit would have been hit right there. At the same time, the London market would have been open. That's plus 12% of our account. At the same time, this is the London candle. Would have gotten our sell stop there, buy stop there. All the candles are still inside. Neither our buy stop or our stop sell stop has been triggered. We are already up with plus 12% of our account. Let's continue. Let's continue. Let's continue. Buy stop was triggered. Let's see how far the market went. Buy stop was triggered. Buy stop was triggered. Okay. I can see sell stop was also triggered. So this one would have been a loss. And remember, while you are still in a trade, you would have already taken all of these other ones. Guys, you guys can be able to see the opportunity. Just on one currency pair that we've picked for 2 days. Just on one currency pair that we've picked and we've backtested, we've replayed for 2 days. You can see we made 12% of our account. So even if you're not comfortable risking 1% per trade, drop it to even 0.5%. Meaning instead of the 12% you can make 6% of your account in 2 days. Bro, 6% of your account in 2 days. That is insane. That is crazy. And that's what Godlove, those are the kind of results you see for students in Godlove University. Take advantage that we've been able to bring this particular strategy to YouTube and master it as much as you can. All right? Because this strategy is something you can already start practicing right now. So let me know if you have any questions on the comment section. Go and open TradingView, open MetaTrader, and start practicing this. Let me know. Drop all the questions, all the comments you got, and I promise I'll reply to all those comments. And for Godlove University students, make sure you go to the private community and share your experience with this strategy. Share how you're finding success with this strategy to motivate others. All right. And again, if you are also a Godlove University student, make sure you go through all the. I think the quiz for this strategy alone is almost about 40 multiple choice questions about this strategy. So make sure you pass the quiz at least 80%. And talking about Godlove University, if you want me to mentor you, if you want to be part of a community with dope strategies like this, check out the Godlove University mentorship link on the video description so that you can be able to join my university. If you want to use my recommended brokers, recommended prop firms, please join my free Telegram community. Join my free Telegram community so that you don't miss stops like this. So check the link below. Sign up with the brokers that I'm using. Sign up with the prop firms that I'm using. My free Telegram community. If you want to join my VIP Telegram community, you can still join. And as always, I will see you guys on these other videos. Peace.